we were the first internationally oriented software product company in the country. And that's why we couldn't raise external funding. And after a few years, I felt we didn't need that anymore. We grew at an average rate of 80% annually for the first 11 years, after which we did our IPO. And that was the first external funding we raised. Because during those years, Finland was not known for its technology. Nokia was still completely unknown. They were sort of dealing with the Soviet Union, more or less exporting heavy equipment to Soviet Union rather than being a global tech company.
When it comes to sales, it's not just the product of the company, it's really about telling your vision to others.
You need to do that selling job every single day, but most importantly, you need to do it in such a way that your whole organization can tell that same story, and they care and they understand your vision, they believe in it, and therefore they tell it to other people in a convincing way.
So hello everyone, we are on another episode on this BetterTech podcast, and today we have Risto Siilasmaa with us. Did I pronounce your name correct, Risto?
Yeah, it's close enough.
Oh, it's close enough. Apologies. And Risto is a seasoned executive who has led many large companies that includes Nokia, and he's been founder and chairman of a company. He had run the companies, he's been on the board of several companies. So there is so much to talk and learn from you, Risto, over here. You have done a lot of work. I was looking at your profile in companies in cybersecurity and then so on and so forth. So I'll pause over here and let you introduce yourself and go as deep in your introduction as you would like, because we will pick bits from there to have this exciting conversation today.
Thanks, Amir. So I'm an entrepreneur, have been that since I was maybe 13 years of age. I formalized the way I was working into a limited company when I was 21, a second-year student at the University of Technology. That's when I started WithSecure, a cybersecurity company. We grew at an average rate of 80% annually for the first 11 years, after which we did our IPO. And that was the first external funding we raised. Because during those years, Finland was not known for its technology. Nokia was still completely unknown. They were sort of dealing with the Soviet Union, more or less exporting heavy equipment to Soviet Union rather than being a global tech company. And therefore, there were no VCs in Finland. And we didn't really have software companies. We were the first internationally oriented software product company in the country. And that's why we couldn't raise external funding. And after a few years, I felt we didn't need that anymore. So my understanding and appreciation of the VC community began only after I started making my own investments into startups. So in 1999, we went public. I continued as the CEO of company until 2006. So in between, there was the tech bubble, and the bursting of that was a very, very painful personal experience, because that was the first moment when my company was loss-making. It was the first quarter when we didn't grow. So since 88 to the year 2001, we only had growth quarters. We only had profitable quarters. And it was also the first time when I had to lay off people. So I pretty much felt that I was a complete failure as an entrepreneur and as a CEO and as a leader. Now I have more practice, unfortunately, in ups and downs. But at that time, I was pretty devastated. My board helped me over that, telling me that you are still the right person to run the company, and we trust you and we believe in you. And that gave me the energy to continue, and we shifted our strategy and got into growth again. And in 2006, I retired from being the CEO, became the chairman. And at that time, I retired sort of as a winner. If I had resigned after the tech bubble burst, I would have resigned as a loser. And that was a pretty important lesson for me. And I had tried to help other founders in the companies in my portfolio and elsewhere as well to understand in an analytical way, when should you quit? When should you give up? Because sometimes it's important to give up and then try something else. But giving up too early may mean that you give up as a loser instead of becoming a winner in your own mind a few years later. But anyway, after stepping down as CEO, having done that pretty much my whole adult life, I was able to spend more time with my real passion, which is helping other entrepreneurs and founders. So I have invested in a little bit over 50 companies so far. So not at a very rapid pace, but still a steady few investments every year. 5 of those have become unicorns so far. So I have a unicorn hit rate of about 10%. But I believe I have a few companies in the portfolio at the moment that will become unicorns. So I hope to keep that rate or even improve on it as time goes on. But I also took a sort of a side trip to the corporate side. So I became chairman of the largest teleoperator in my region. And after that, I became a board member of Nokia. And then a few years later, the chairman of Nokia. And that was at a time when Nokia was in a deep crisis, in an existential crisis. And we had to do some pretty drastic things in order to save the company. And the company was transformed almost completely, to the extent that in just a few years, we were in a situation where more than 99% of our people were people who did not work in the company just a couple of years before. And we were still a company employing 60,000 people, so it was not a small number, but 99% of those were new. And a few years after that, we had 90,000 people, and it was a brand new company. So I continued as chairman until 2020, and after that had even more time to spend with startups. So that's what I'm doing pretty much full time at the moment, alongside with various governmental roles and duties, chairing certain committees and working groups and such, both in the EU and Finland. Also having been very active in China. Not during the last few years, because I just lost the fun out of dealing with China. China changed, but used to spend a lot of time there. And of course, in the United States and in the other main markets where my own company has been working for over 30 years. So that's very briefly who I am. On the professional side, there's a personal side as well, but I'm not going there.
I think there's a very happening professional side that you have, and I'm sure there will be a similar personal side to it, and that will also have a lot of interesting stories. So you've given so much, I would say, ammo to discuss. You had been a CEO and you built a company from the scratch, and took it. You had been a very outstanding. You have been an investor, and you are an outstanding one who had a kind of a hit ratio when it comes to unicorn, not just being success as a 10%, which is kind of great. And then you've also had a corporate side. So we'll try to touch upon all of this. I think it will take a few hours even to to discuss all of this. But talking about there are 3, I would say, distinct storylines over here. One is your journey as a founder and CEO, and all the way when you exited that. The other one is your journey as a corporate leader of a giant like Nokia, and the third one is your journey as an investor. Let's take the last one first. So when you see in startups these days, and what is that make something investable in your eyes? How do you have such a huge unicorn hit rate? I mean, how do you spot those outstanding startups. What is the special ingredient that you figure that out in entrepreneurs and that startup idea? How do you go about that?
So how
Right.
does one identify future unicorns? That's of course a topic where lots of VCs have expressed their own methods and opinions, and I think the typical answer is that it's all about the team, and I agree with that. You rarely are successful when you invest in an idea. You are much more often successful when you invest in a team that has an idea, even if you feel that it's not such a great idea, but you believe in the team so that they will reinvent the idea and continue improving on it until it becomes something that is really good. But just saying that it's the team is a very sort of an intellectually lazy answer. So what about that team?
Yeah. What's in the team? How do you identify that?
And that's a bit difficult to express in an analytical way. Experienced people that have recruited a lot of people and observed who do well, who don't do well. You sort of build almost a neural network type unfathomable capability to just do the pattern recognition of who does well, who is more likely to do well, and who is more likely not to do that well. But there are a couple of things that stand out. One that almost always works is when somebody has a DNA sort of always running simulations in their mind. And what I mean with this is that if you have a business idea and a business model, which sometimes may be quite complicated, you sort of have an Excel spreadsheet in your mind where you can identify the key parameters of that business model, and you can try out different versions of that in real time, and you can explain to somebody else how that works. And then you know what are the key KPIs, you know where they should be in order for that formula to lead into a growing, profitable business. And you can test different variations, first in your mind, then in the real life, and you can explain the causality to somebody else. And I have known a number of people who are like that in a very natural way. It has not been something that somebody has taught them. It has typically been something that they have.
That's how they
either been
approach
born with.
any problem. That's how they approach any problem or any idea. I
And
mean, do I see anything? Yeah.
it's sort of an engineering way of thinking,
Right.
but it's not just engineers who can have that. It's a structured way of thinking, trying to identify the sort of interconnections between different factors related to your business, and having a sort of a virtual model in your mind about that. And that's the number one thing that I'm looking for. When I meet somebody who thinks like that and can explain it, and is of course very sort of data oriented, because it's all about what metrics you have and how do they factor into the overall outcome. That's what I'm really looking for, but it's not very common that you meet these people. And then I'm trying to teach the people that I work with to think like that, and it can help them become successful. But overall, it's still a bit of a black box formula where you just intuitively feel that this is a good CEO for a startup.
Probably what you're alluding to, I mean, a lot of time when you see someone, you look at their resume and their past record of how they have been successful, but that's actually an indication of what they have done in the past. That may not be a prediction on the future, how will they perform in the future. And their performance in the future, as you put it, is their ability to comprehend a problem, break it down, figure out what are the different possible decision paths are, how these decision paths look like, what are the various analytics they need to measure on there, because very often it's like I mean, to me, entrepreneurship is like building a plane while flying it. So, and there are thousands of things that can go wrong. So I kind of concur with that. I do angel investing myself, and I think somebody who can do that is actually can give you this part that they can think about the problem, they can solve it, and they can find solutions to it. But what about the grit factor, that their ability to plug it out even if when the chips are down, pick themselves
Yeah.
up? Because I mean, there's one thing that somebody can communicate well and break it down well. The other thing is that they can persevere. So how do you find that stuff within an entrepreneur?
And before I answer that, let me just make a distinction on the previous topic.
Sure.
What you talked about identifying a problem and breaking it down into pieces and understanding how to solve that. That's very much the sort of the engineer's way of thinking. But
Right.
that's not enough for what I'm looking for. What I'm looking for is, in addition to what you said, is somebody who continuously simulates several scenarios in their mind, not solving a problem, but optimizing the overall business
What if
model
kind of
process or whatever. Yeah.
what if kind of simulations? Yeah,
Yeah. And
absolutely.
that's less common than finding somebody who's really good at breaking big problems into small pieces and solving them one piece by piece. But then the grit, there are a few things that people who definitely have grit, or as in Finnish we call it sisu. It's
Sisu.
yeah, who have sisu. For example, top athletes. So if you have a founder who has been a competitive athlete, you know that they have practiced thousands, tens of thousands of hours early in the morning when everybody else is asleep, and often into late nights. Or if they were raised at a farm, that's probably the most time consuming family environment that you can get born into, where you work a lot and you
Yeah.
sort of learn a work ethic through your parents and the environment. And there are definitely other similar backgrounds that people can have that can lead to the same outcome. And it's about being able to put in the hours, not give up, having that grit or sisu, but it's very much about working in a smart way and not trying the same thing time after time expecting a different result. And it's also about what we talked about earlier, knowing when to give up and try something else.
And how do you find when to give up? It's an interesting piece. I mean,
Yeah,
there's no
I don't.
definitive answer to that. There's no definitive answer to that.
Yeah.
You never know whether you have done, whether you have given up at the right time or not. But any any heuristic around it?
The problem with giving up is that for the best people, the ones who have that grit, it's often a very difficult decision. They don't want to give up. They feel that they are losers when they give up. And they often continue too long on that same path. It would be better for them to change that direction earlier. And one good way of doing that is, before you are in that desperate situation, you start again building scenarios in your mind. How can the future unfold? Of course, you have what you want to happen, and you can create milestones and metrics so that you can follow whether that future is actually happening. But then there are some other scenarios, some of which would be really bad. And you can do the same thing. You can build certain milestones or KPIs and track whether that future is actually unfolding. And then you can decide that if these KPIs are at that level, or if that milestone is passed, then I need to stop. We need to stop doing that. Because if you decide on it earlier, when it's not real yet and it's just a scenario, then you communicate it to your leadership team, your board, your investors, then it's much easier to do the right thing when that situation is reached. And of course, all the time you work to prevent that bad future, and you try to figure out what shall I do if that really happens. And that sort of scenario thinking, that playing with the different futures and thinking about the actions you can take, that actually gives you control, even in desperate situations. And having some level of control creates faith in the future. It gives people courage. Because this situation where people lose faith is when something bad is happening and it's outside their control. They are not doing anything. There's nothing we can do. Things are being done to us rather than by us. But you can
where is the
avoid that.
locus of control? Is the locus of control inside or outside? I mean, are you blaming the outside factor, or you feel that you're in control and can do it yourself? One thing is that a lot of people say that once you figured out a team, you invested in that. What is the typical role from a CEO that you look at? Is it, generally say that could be sell, and recruit could be the two jobs that CEOs won't do enough, which is starting from selling their vision to investors, to selling their vision internally to their customers, and then recruiting team after team after team. So, talk to us that how to build from that to operationalizing some of that stuff, and what you look for in a CEO, and how do they scale, and at what time the founder CEOs are not relevant anymore, and you probably want to have maybe a different CEOs, or maybe you don't think that way. Help us with that.
Well, I think it's very clear that some of the most valuable companies are still being run by the founder CEOs in tech, especially in tech. And that tells us something. Because if you take the top 100 companies in tech in the world and you calculate by value how many of them are being run by founding CEOs, it is actually a surprisingly large portion of those companies or their value.
Or at least the founder is still at the top, even if the board has given them some executive support, like in the case of Google, or even in Facebook with chief operating officer or with someone else.
I don't know if we should think that the board has given them. I think the smart CEO does that themselves.
Mm-hmm.
Maybe the board advises them. In the best case, the relationship between the board and the CEO is a very collaborative one, and a very open, transparent, trusting one. And you can talk about your insecurities and when should I hire somebody that actually takes on a portion of my current role. And it's a safe environment to discuss that. But I'd rather think that the smart CEO does that themselves. But anyway, the CEO's role is to have a responsibility for the future of the company. And that is more important, and it's bigger than hiring, or it's bigger than raising funding, and it's bigger than selling. It depends on the moment of time, what is most important at any given time. But the CEO should always be sort of preparing for the next steps. And in the best case, not having to do the work of this current step, but preparing the company for the next step. And therefore, recruiting, you should build a process and an organization for recruiting. Of course, you help. You interview all the key recruits. You have the final veto, but you delegate as much of that work as you can. And you create mental tools and sometimes digital tools to ensure that the recruitment team knows what kind of talent you want in the company, so that they can identify these people. Many companies, as you well know, have certain questions that they ask in interviews, and they try to identify certain behaviors that they want,
Well,
or certain,
for that matter, if the person
yeah,
is right. Yeah.
or certain behaviors that they don't want in the company.
Yeah, absolutely,
And
absolutely.
selling the same way. Of course, the CEO is always, at least in most cases, the best salesperson for the company.
Yeah.
But you need to get a lot of other people do that for you. You
When it
can't
comes to
rely on
sales,
yourself.
it's not just when it comes to sales, it's not just the product of the company. It's really about telling your vision to others. That's making them buy what you, and not in a positive sense, not in a negative sense of the word sell or buy. That people buy into your vision, buy into the purpose of the company, and then work with you to achieve that. Because so this is one of the key skills out there. Okay, and as a
And
board,
you need to do that selling job every single day.
yeah,
But most importantly, you need to do in such a way that your whole organization can tell that same story. And
correct,
they share and they understand your vision, they believe in it, and therefore
right,
they tell it to other people in a convincing way and in a genuine way. And
right.
that's what I meant
That's very
with
important.
not
Yeah,
being the salesperson yourself. You actually want to get other people to do that in a very effective way.
that's correct. And that's where when the scale comes in, you need to make sure the culture remains intact, so that people would be having the same kind of vision, or they feel that they are attached to the vision in the same way, or as close to possible in the same way as you potentially are. How the, I mean, as the company scales, and how you see the role of the board changes, or a board member changes, and where do they come in? What is an effective board? If I'm a CEO, what kind of people should be there in my board?
Well, let's start with a few sort of stereotypes. There's
Hmm.
a there's a VC board where the various VCs, of course, want the company to be successful, but they are also a bit wary about each other. They don't completely share the same interest in the sense that they have come in at different times. They have different priorities for the terms in the shareholders agreement. They are very keen on dilution. They talk about option programs a lot in the board meetings, but they don't necessarily help with the strategy of the company enough. And that's still the most important thing. What should the company do and how? And then if we take another sort of stereotypical example, it's a public company board where external people are invited in, and they sometimes think of that as just a line on their CV. It's a point of pride for them to be a board member of a public listed company. And then they think, I'll just do this for a few years and then I'll move on to some other companies. Do they really have a sense of ownership of the company and sense of responsibility for the company? Not necessarily. Sometimes yes, but not always. And it's a little bit like an act where everybody plays their role, but it should not be an act. It should be real. So I would be looking for people who really can feel a genuine sense of responsibility for what the company will do and how it will fare. And that is sometimes difficult because in an externally funded VC-backed company, you don't have full control of who is on your board. In a public company, you have actually more control of that, but then there are external pressures that are diluting that effect and guiding things. So recruiting board members is often sort of valued too low in the sense that if you are hiring a person to your leadership team, you may have 10 people interview the candidates. You may have a lengthy process. You have a trial period. You let go the people who don't fit in after 3 months. For board members, you may have a couple online meetings. You have maybe a headhunter who has been helping you in a bigger companies. And then you just say yes after just a couple of meetings, not 10 people interviewing, maybe a couple people interviewing. And you don't have that option in most legal systems to let the board member go after 3 months.
Yeah.
It typically is considered bad form to change a board member if they haven't been on the board at least for 3-4 years.
Right.
Which I always have felt that it's not right. If I happen to do a bad recruitment decision and hire somebody on my board who doesn't fit, I need to get that person out as soon as possible because that person is not happy. I'm not happy. Nobody is happy. It's a destructive situation.
Good. So, understood. And yep, that's an issue with the board members is that which you have reported that you do not have the luxury to have detailed sittings with them, many times interview them, and then it's not a 3 months probation where you can say goodbyes. It's an issue. So,
but it could be a more involved recruitment process if you want to make it like that. It's your decision.
Right. But many times, a board member is also being kind of is on your board because, as you put it, because you have taken an investment and they have a seat on the table anyway. So that's how also sometimes the board members are there that you have to work with. Okay.
And that's why, as a founder, when you're selecting the VC who gets to invest, you are actually recruiting a board member at the same time.
Yes.
And I always advise founders to preferably get a written commitment on who will be the person representing the VC in the board.
Okay.
Of course, it's bound to change over time, but at least you know who will be the first board member from the VC.
Right. And what, as a CEO, should I expect from my board members in terms of help that I can get and kind of advice? What should be my goal with my board members?
Well, ideally, you have created profiles for your board members before you have recruited them based on your strategy, the business model that your company has, what kind of products, what kind of customers, what's the go-to-market model. And then you pick a number of profiles that sort of match those perspectives of the business model and go-to-market model and so forth. People who can advise you in the key parts of that. And then you start recruiting for somebody, let's say, who has a strong channel expertise into the mid-market in the United States for enterprise SaaS solutions. And then you start recruiting for somebody who has been a CFO in a growth company that has gone from 10 million to 500 million in a few years, and who has actually traveled that path, because you need somebody to run your audit committee who understands the growth pains and issues and funding issues and so forth. So you have a board that represents different backgrounds, different expertise, and then when you face an issue, you always know that there's somebody on your board you can call.
Yeah. Totally agree with that. So your board members is an opportunity to tap into the talent and strategy that you don't have on your team sometimes, and they have seen things beyond much more than probably you have done, and they can guide you. So Risto, switching gears a bit. So now the company has scaled and it has become, for like a better example over here, let's say Nokia. What eventually becomes what eventually happens that companies become large enough and they start to lag behind or stop innovating and as a result uh, I mean results in the demise of the company. So what happens there? I mean, you've been through this, you have seen it all happening. What happens there?
Well, let's take an example. I mean, not a good example in the sense that the company would have done well, but let's pick Kodak. Kodak is a company that invented digital photography. In the 70s, they built the first digital camera. It had a resolution of 100 times 100 pixels, black and white, not even grayscale, so really shitty pictures. But the capabilities of those sensors developed according to Moore's law.
Yeah.
And by 1980 or 1990, you had actually lots of data points on how does the capability of that sensor develop over years. And you could have assumed that, as I don't see any force acting on that development to change it, let's assume that it will continue on the same path it has continued so far. And then let's try to plot when the capability of the digital camera will surpass that of a film camera. And we end up that it will happen sometime around the year 2000 or 2005.
Right.
Which actually is exactly what happened. And it was very predictable. There was no change in the curve. And yet Kodak was bankrupted by its own invention. Not because there was nobody in the company who understood what's happening. Of course, there were thousands of people who saw the writing on the wall. They were photography enthusiasts themselves. But the top management still did not act. They were not incentivized to act. They didn't dare to act. The shareholders would have been unhappy if they had done something drastic because it would have cost money. The bottom line would have changed negatively and so forth and so forth. There are always lots of reasons not to act. But this is a good example of a company that should have been able to change themselves because they had all the tools in their hands.
Right.
And why do these stories happen? Sometimes they happen just because they are sort of bound to happen. The creative destruction that people talk about, it's a good thing. Because sometimes companies and their business relationships with their customers, they just become so fixed. They become very difficult to change. Because you should change the way customers think, you should change the relationships you have with them, the contracts you have with them, the technology you deliver to them, your own people, the way they think, your culture. It just becomes too much. And maybe in the case of Kodak, that's one example of
So,
such a
but
thing.
you have 10 unicorns in your portfolio. What they need to keep on doing for the next 5, 10 years so that they keep on maintaining their status, their lead, and keep on expanding from where they already are.
Well, let's pick one example. DoorDash acquired a Finnish company called Wolt for 8 billion. And I invested into Wolt when it was just an idea at the friends and family round and continued to invest more over the next rounds. So I have followed the journey from the very beginning. And DoorDash has and I don't have any formal relationship with the company anymore except owning some shares. So I don't know any secrets, but thinking about what they are trying to do is they have been the number one delivery company in the US. They bought the number one in Europe, and they believe that in the markets where the delivery business is not at the level of the US, it's growing towards that. And the US is still growing. People are using these services more and more, but the gap to many other markets is big. So they see an opportunity to grow significantly without any change in the demand, because some countries are just 5 years or 10 years behind the US. And therefore, they only have sort of one strategy, and a very simple one, and they don't see major risks in that. But there will be a moment in time when it will be a saturated market, and competition will also be stronger and bigger, more consolidated. And then the question is, should they try to change before that? Or is it okay for them to just be satisfied in doing that one thing very well in a consolidated market where margins are smaller? And it may be fine. Maybe they shouldn't try to change, because it's very difficult to add a completely different business model into the same company.
I was listening to this one of the recent Eric Schmidt's talk in Stanford, giving to Stanford students, and somebody asked, or probably he himself mentioned, somebody asked that Google was doing AI much before than anyone else, or probably they have the most people doing that, and all of a sudden, from somewhere, OpenAI came in, and they kind of, for a lack of a better phrase, kicked ass. But the point is that, and he said that at some point in time, Google has started to have a lot more discussion on, let's say, work-life balance and blah blah blah. And then there are startups who are in a rush, or who are geared to build something. So do you think at some point in time the complacency sets in because of the size of organization, and then there are certain organizations who deal with it much better, let's say Amazon, versus there are others who won't? And if some organizations deal much better with it, first of all, is it really a threat or not? And if some organizations deal better with it, what is that they do differently as compared to others?
That's a good question. If we take Cisco, for years and years they have well understood this dilemma and concluded that they don't need to do all the groundbreaking research themselves. Because it's really difficult, because there are so many different directions technology can take. They will just acquire the best company taking the technology into a new successful direction. And therefore they are outsourcing R&D to companies that don't even know that Cisco is outsourcing their research work to them. And then they just are very good at acquiring. In a very sort of physical way, in my companies, I see as people age. So when you start the company, the average age is 25. 5 years later, it's maybe 28. And when you get to 1,000 people, it can be 32. And then when you get to 10,000 people, it can be 42. And then when you hit 50, the stagnation is quite far. Because you can't grow eternal. You can't always be hiring 30% more people every year. It's impossible. And therefore, the average age goes up, and maybe people just get more complacent, partially because of age. They get family. The kids are small. They cry in the night. You don't sleep. I mean, you get so many other things in your life. It's just part of life. You can't completely avoid it.
It's nature, right? So and we have already passed like 45 minutes. So I'll try to close this, but before doing that, so what you invest, and we ran this today's segment more around the startup. So what kind of investment thesis you have? What kind of companies you invest in? Is there a change in investment that is happening from, let's say, post-COVID 1 or 2 years to what is the kind of funding available or the investment available to the companies, and how the startup landscape of investment has changed or is changing?
I'm not a thematic investor as such, but I do want to invest in companies that will be in markets where demand will continue to grow for the foreseeable future. So I do want to understand the the underlying dynamics of the market, preferably understand them very well, look at a lot of data, look at a lot of statistics, analysis, trend lines. But as we discussed earlier, the team is much more important than the idea in the end.
Right.
The idea, in the early years, the idea is much easier to change than the team. One thing, of course, that has emerged over the last 10 years is AI. And maybe 12 years ago, I was in a situation myself where I had to give public presentations that somebody had done for me on AI, talking about how great AI is, and I didn't understand much about it myself. So I was like a parrot that was just repeating what somebody else had told me to say without understanding it. And I grew really frustrated about that. So I went back to school. I started coding again after a break of 30 years. And I started programming different machine learning models, and a different way than people do today, because back then you didn't have these libraries, these frameworks that do so much for you. You actually had to code everything yourself. You need to code backpropagation yourself. And that really teaches somebody to understand certain fundamentals about machine learning. So I continued to do that for a few years, and then had been talking very vocally about the importance of machine learning or AI ever since. And that has helped me to also attract founders who believe in AI. They know that I believe in that, and they know that I understand a little bit about that because I have been coding those systems myself, not at a professional level, but at least at some level. And therefore, most of my investments somehow relate to AI. There are companies where I see that they understand the potential and opportunity to change the way businesses were run earlier to how they can be run now or in the near-term future using AI. So that's definitely one theme that I strongly believe in. Quantum computing is another one, which is a bit further away, but I'm convinced that it will change certain businesses in a fundamental way. But there are many other technologies like that in bioengineering, CRISPR, in chemistry, especially with the combination of all these. How do you use AI in crafting new molecules and disrupting certain, let's say, big pharma fields? There's so many opportunities. And it's all about wealth creation through technology. Technology is by far the biggest value creator by maybe 10x compared to everything else.
Yeah. And have you seen there's a decline in startup funding or an uptake again? What about the funding climate that you're observing around you?
Well, I'm only investing my own money, so I don't have LPs. I'm sort of a evergreen single LP fund, or the fourth fund at the moment. So I don't do fundraising myself, but of course I help my portfolio companies to raise funding. And oddly, I have felt that it has been pretty good all the time. I haven't had a single company that has failed to raise funding through the COVID period. Of course, we all became a bit more cautious about burn when COVID began. So the need to raise immediate funding has also been less. But I have been very lucky with the founders that I have supported. They are good enough to having been able to raise funding even during these dry years. So subjectively, it has felt different than what I see from the statistics.
Mm-hmm. Okay.
And it's always like that. VC can have 50 companies or 80 companies or 30 companies in their portfolio, and that's life for them. It's about what are those 30 companies. It's
Right.
not about the companies that other VCs have in their portfolio. It's about the companies that I work with.
Nope, that makes sense. So, I guess there is so much to talk about with your background and I mean your rich experience, but I'll just limit our today's discussion to what we have discussed today. I think it's really great to tap into your experience of building up companies, how the early selection takes place from the investment point of view, how the CEO should work, the relationship with the board member, and eventually when the companies get bigger, and your take on investment. So, thank you very much for your thoughts today.
Thank you.
And I'll try to get you on another podcast as well to discuss more about the company culture and a lot of other pieces that you have touched upon. But thank you very much for being with us today.
Thank you.